Hey everybody, how you doing? Hey Tammy, Barnaby. Ooh, Tony's here. In case you haven't noticed, Lori is not in today. So unfortunately for you, maybe fortunately, probably unfortunately, you got to deal with me. My name's Jason. I'm partner, co-founder of the Chart Guys, friend and cohort for Lori. She has a well-deserved day off today, so I'm going to be covering the pregame show for her. We are going to follow Lori's format mostly. And we're going to take a look at all of the regular things. I wanted to start a couple minutes early because we have a jobs report that's due out in 2 minutes. A jobs report probably won't have much of a crazy impact today. There's basically the same setup as last time when Lori was talking about the jobs report, which means there are really three scenarios. If the jobs report is a total beat, meaning we add way more jobs than expected, what that is going to mean is that the economy is much stronger than we anticipated, and as a result, we're more likely to see interest rates increase, which is going to be bad overall for the market, specifically tech companies who have a lot of debt. If the jobs report is a big miss and it's way under, then it's weak economy, but we're staving up interest rates, so it's sort of a muted flat. Well, ideally, what we want to see is a pretty accurate representation of the numbers to the actual projections, which means we shouldn't see too much of an impact in the markets. And pre-market, that's more or less what we're seeing so far. So that is due out in a minute. It usually results in some sort of volatility, but maybe not quite today. So with that said, we'll keep an eye on that, and we will keep our news tickers open and our pages open for our data. Let me get those going. I'm going to do my best to watch the chat here. Usually I'm sitting there deleting comments and saying hello. Hey, Bobby, John Williams, Widow Puppy. That's a scary name. Widow Puppy. All right, a little bit of a different vibe, hey? Okay, let's get into it. It's 5:30, July 2nd. My name is Jason. If you're just tuning in, this is the actual start time of our show. Our jobs report's due any second, so I'm just waiting for that to see if we can't get some information. We'll come back to it. Let's start with the SPX 500 USD. You'll notice my tickers are a little bit different. Where I can, I use live data. For some reason, I don't have my DGA or my Russell 2000 futures contracts, so I'm going to be 15 minutes delayed here. But let's start with the SPX 500 USD. So on the daily time frame, we have pretty steady climbs overall for this ticker, which means we are looking for essentially what we call in the chart, guys, a burrito breakdown. A burrito breakdown is when you have overall consecutive higher lows every day. If we look at SPY, it's a little bit different. Here we can see a little bit of a low, but overall we are climbing really, really slow and steady. Slow and steady is good. However, it makes for sometimes a slow trading day. All right, here's the jobs report. U.S. has added 850,000 jobs versus the 700,000 estimate. So great for the economy. Great to see workers going back to work. In theory, this will have a negative impact on the market because the interest rates are more likely to go up short term versus long term. But let's go check out what the action is right now. Big volume coming in on that initial reaction is to the upside. There are always two opportunities for bulls and bears when we get into these situations. We can see a push in one direction, and then we see the counterattack. It's really who wins that initial battle that really matters. So right now, bulls are pushing to the upside. Starting to see a little bit of a slowdown now. Let's see what the bulls and bears do in this initial fight, the first exchange of punches, and that's really what it is. It's bulls get a chance to punch, the bears get a chance to punch, and then we start to see who's actually in control of the situation. So going back to the daily analysis, as this flushes out a little bit, we're looking for the loss of overall daily higher lows on most of our SPX related tickers. So that's SPY, SPX, the futures, E-minis, etc. If we go to the 4-hour time frame, you can see how we are stair stepping up. So we just hit a 4-hour higher low. If we look at this like a run up phase one, well, what I'm trying to say is we got a 4-hour bull flag here. We have our run up, we have our phase two, and then we're looking at our phase three. Big push for the bulls so far. So this is kind of exciting. Not exactly what I intended to see happening. Well, I shouldn't say I intended. I expected to see on a positive jobs report. Interesting how things can change like that. That's why with technical analysis, I love technical analysis because it allows us to create multiple scenarios, right? We talked about 3 different scenarios, and ultimately it doesn't matter what the news is, it's how the market reacts and then how we react to the market conditions. And we're using technical analysis. We can create scenarios to react to anything, make a plan for anything, and be able to profit from anything. So let's see what happens here. But this is a full breakout of our 4-hour bull flag to the upside, bulls remaining in control. I got to remember to move through things a little bit faster here, friends. We're going to be live streaming for the Chart Guys community in half an hour doing our morning show, so I'm going to have to jump here in 17 minutes. Hopefully I can get through all these and take a look at some things you want to check out. All right, looks like we got a Bitcoin breakout. We'll get to that in a second. Let's take a look at the Nasdaq. So the Nasdaq on the daily time frame, we had a daily bull flag, beautiful run. Looks like we're getting that upside continuation. Volume is pretty good. We'd like to see lower volume on a bull flag consolidation. A bull flag we break into 3 components. We have a phase 1, which is our run up. We have phase 2, which is our banner, the consolidation period, and then we have a phase 3, which is our continuation. So we actually saw increased volume on our phase 2, which is a little abnormal, but we're looking for that full breakout. We're seeing that continue to the upside right now on the Nasdaq. So we go to the 4-hour time frame. Here is that hourly downtrend. We break that hourly downtrend with a new high. So things are set here, and we have a 4-hour higher low, higher high situation. So we will look for the bulls to continue this, getting close to hourly overbought, and a lot of room for hourly consolidation. So we have our higher open, which is going to translate to our SPY and our QQQ, the higher open. And we're going to be positioned for hourly consolidation. We'll get to those. Maybe we'll get to SPY and QQQ if we have actual time after. What I like to do in comparing my futures data is correlate that to my ETFs that I'm actually trading, because I trade the ETFs, not so much the futures. So I usually generally check out both of those. Okay, big win for the bulls on this. On both sides of the coin, we are seeing bull pushes and pressure. We still have to allow the bears to consolidate, have their counterattack, but so far they are nowhere to be seen. Pretty positive reaction to the jobs report. Quick look over at the E-mini Dow futures. Go to the daily time frame here. Again, this is 15-minute delayed data, so we're not going to be seeing that positive response. So we can look at the daily time frame and say, look, overall, we have a weekly period of consolidation. We may be able to look at it as a weekly bull flag. If it is a weekly bull flag, what we need to do is get over 34,827 in a pretty significant way. That is a double top. And on the daily time frame, we see a big V shape. We see a daily higher low, and bulls continuing to try to push to the upside. We're going to look to the 4-hour time frame to look for this 4-hour higher low to set here, remain above our EMA 8 and our EMA 12, and look for a slow and gradual 4-hour pattern to continue. The strong market in the SPX and the Nasdaq is going to help that, in the sense that we're likely to see a similar response, especially when we're looking at the Russell, who generally is, you can view it as a representation of small business. So if overall jobs are being added, it means there are people coming back to work or seeking out work, and those small businesses are going to have the staff that they need to succeed and generate revenues and eventually line the pockets of those workers. So when we go to our Russell on the delayed data, we have our drop, we have our V-shape, we have our daily higher low, and we have our daily target sitting here at 2,346. So we want the bulls to get over top of that. Hourly time frame, a little bit of consolidation here, looking for a 4-hour higher low. Likely we broke our 4-hour resistance at 2,330. I like doing delay data sometimes because you get to see how accurate or inaccurate you are. And every time you run a chart and every time you do an analysis, you get a little bit of experience. And that collective experience is what makes us better chartists and better traders. Oh, Lori's here posting some tickers for you guys. Those are the Tesla numbers. Excellent. Thanks, Lori. Let's take a quick look at gold. Gold reacting positively to this news as well. 4-hour time frame broke its resistance at 17.9.446. The reason that is important is because on the daily time frame, we have the potential to be building a bear flag. It's a little bit of a wonky bear flag, given that we lost 1761 and bounced right back. So we're looking for these ranges to open up, and we're looking for an outside bar on the weekly time frame. Still in a weekly bear flag, still technically in a daily sideways consolidation period pattern. However, we have a 4-hour uptrend now, and once we clear all of this congestion, bulls are going to be in a good position to negate that weekly flag and continue to new highs. Over 1797, there's not a lot of resistance for gold, and bulls will be well positioned to move up through that area of lack of resistance. It's really moving through mud versus just moving through sweet fresh summer air. That's a weird analogy. I know that. I wish I didn't say it, but here we are. Looking at oil. Oil on the weekly time frame. Big breakout. I understand gas prices are supposed to be the highest they have been in a very, very long time for the 4th of July weekend. Probably going to be a double whammy with Canada Day being yesterday, but we'll see what works out for oil. What we do know is we have a daily uptrend, daily higher lows and higher highs. A lot of room for an inside bar today. 4-hour time frame, looking for a double bottom right here at 74.59, looking to hold that. That is a 4-hour lower high, ideally a higher low, possible hourly equilibrium with a strong bear bias given our distance from this low to this low. Perfect equilibrium has us looking for, let's get rid of that magnet. A perfect equilibrium has a move up and then a pretty equidistant period of consolidation where our highs and our lows have a relatively similar distance. When we get into a situation like this where we have a low, a lower high, and we push very close to our support, it shifts the bear bias to the downside because if we are in perfect balance, bears should not be able to advance that quickly and that aggressively to that area of support. So we can look for a higher high over 75.51 to negate this entire pattern and look for upside continuation. If we lose 74.59, we are looking for daily consolidation with a daily higher low somewhere over this magic guy, $72. I understand there's a breakout happening in Bitcoin. Let me take a look at the chat here real quick. TR Kobe. If you should be able to see Lori's comment. If anyone's banned in chat, it just means that you can't post. So you should still be able to see everybody's stuff. But I've never been banned, so I'm not really sure. Not sure how that works. Let's take a look at Bitcoin. Someone had said Bitcoin is breaking out. Doesn't look like it's breaking out on the daily time frame quite yet. We do have a couple of interesting scenarios for Bitcoin. We're going relatively sideways. If we look at the weekly time frame, we're a little bit too extended for this to be a bear flag. And on the daily time frame, we haven't really quite made up our mind yet. We had a daily downtrend. Now we have a higher low, a higher high. And right here is where we need to change course. We need to get a daily higher low going. And the reason we are interested in that is, well, is because the lack of follow through in one direction is a vote of confidence in the other direction. So here is our hourly setup. We have a triple bottom around 32,700, and we're looking for the hourly trend to change. If we can get over 33,599, we're likely to set the daily higher low, and we will continue inside this little mini equilibrium slash daily trend change, looking for bulls to get over top of 36,675. So to draw that out, what I would be looking for in this scenario is an hourly trend change here. A higher high, come on. You can do it, there we go. Trend change like this, and look for this sort of pattern to change into that direction and get over top of that target. That would be ideal for the bulls. Let's see here. On Ethereum, much more aggressive move in the daily part, on the part of the daily bulls. We're still looking for a daily higher low, so the same sort of rules apply. You're going to notice that this concept applies to pretty much everything. We're looking at price action, we're looking at validation, we're looking at the bulls and bears to prove their intent by crossing significant boundaries. Daily time frame, we have a near double bottom at 1700. We got our daily higher low, over a higher high over top of this range. Now we're looking for a daily higher low. We go back to the hourly time frame, just like we did on Bitcoin, looking for this lower high and lower low pattern to change. We have a double bottom here, 2016, looking for the bulls to get over top of, well, let's get our magnet going. Over top is 2079 to change the hourly trend to ideally set that daily higher low. That's what we want to see. What I would like to do, I'm going to take a look at SPY. Whoo-wee, look at that. SPY monster gap up. So when we have these big pushes to the upside, it's a tricky maneuver, but what we have to do here is allow the bulls to continue to be crazy bulls. But at the same time, we always have to be cognizant of the fact that we are due for consolidation. So we're always waiting for that bounce to shift and to see a movement to the downside, because the bears move more significantly and more aggressively to the downside than the bulls move to the upside. Here's an example. Daily consolidation underway. 1, 2, 3, 4. 4 days down and what? A week and a half up. Over here, big consolidation, 3 days down, multiple days to recover. So yes, allow the bulls to be bulls. Keep playing bullish until you are proven through price action that things are shifting, and use your smaller term time frames and the lack of follow through on, say, the hourly, just like we're looking at on the Bitcoin and Ethereum charts, as an indication of when the consolidation begins. Daily time frame, here's that consecutive daily high or low that we were talking about. We looked at the SPX, but on SPY, every day has a high or low. Once that changes, we're looking into consolidation. Looks like we're going to get that high move, that higher open, 431.72, 5-minute time frame. Yeah, pretty nice for the bulls. Continuing 5-minute uptrend, and we'll get into the short-term analysis when we do the regular chart guys stream. That is what we do. We get prepared to do those day trades, those quick scalps, and get everything underway. For QQQ, look at that. Daily bull flag looking to continue. Okay, we've got 6 minutes left. Let's see. We got a couple of high volatility movers. Okay, let's look at Space. So Space had a pretty triumphant move up and a triumphant move down, all occurring in after hours. Let's go take a look at that. So we had some news came out that Richard Branson was going to beat Jeff Bezos to space. So we shot up from 43 to 59. We hit 5-minute oversold conditions, and so far we had a little miniature bounce. When I'm looking at 5-minute oversold conditions, what I want to see is a dip below 30, and I'm going to take my exit. My ideal target is going to be my EMA 12. If we don't get to EMA 12, that is a sign of weakness, and that's a lack of follow through for the bulls to capitalize on an oversold bounce condition. So what that tells me is we're likely to see more downside here. If we go to the 15-minute time frame, we haven't established a support yet. And we're due for a little, well, look how much room we have still on the RSI. 47.43, still have room to dip. We have no support, and so far we don't have bulls showing up. So if I am going to be interested in playing bullish on SPCE, what I'm going to do is at a minimum, a bare minimum, wait for a high volume break of 53.40. And right now, all the proving is on the part of the bulls. They've given up a lot of territory, and they need to get over top of $57 to have this daily upside continuation. I just don't think we're going to see a ton of that. That's a huge range and a lot of ask for the bulls. Anything's possible, I guess, but we're seeing some weakness, more so than we would like to see. In a similar fashion, we're looking at DIDI. This is going to be another volatile name. It's an IPO. As of 2 days ago, already seeing some bad news as we had some big drops and big volatility in our pre-market session. Look at the volume coming in here. So bears still in control. Remember in these wicks, when we are trading pre-market, the volume and the order book is significantly different than when the market is open. So we can see these big wicks in different directions. So we shouldn't be surprised to see 1708 acting as a resistance, because we already have known a lot of resistances up here before the news dropped. So bears in control, 5-minute downtrend, support in the area right about where we are, 1780 to 1480 to 1460 is the area congestion. So we'll need to see a trend change down here. And for me, that is going to look like probably a break over this near double top of, let's just call it 15 psychological. But right now, bears are in control. Yes, there is a drop in price for DIDI. Let's take a look. What's next? How's Apple responding? Oh, Apple bulls continuing to climb. Resistance. Well, we're already over top over 137.88. So now we are going to be looking for a high, and this is what I like. I like to see these big moves up. Daily consolidation. We are primed for daily consolidation on Apple, just like we are on SPY. Look at these consecutive higher lows. Oh, a little bit of incorrection on my part. But overall, big momentum here. If we break 137.88, bulls have done their job. We're going to allow them to have some daily consolidation, but so far they're in complete control. All-time highs is only the only real resistance right now, 145.09. Let's see, 3 minutes left. Who else is being a significant mover? Wish. So Wish on the day pre-market is at $12 psychological, looking for a daily high or low. Looks like we're under our EMA 8. And the only real support we've got is still significantly far away, $9.71. So what we're going to be doing is looking for oversold bounces. Here's one, good close to our EMA 8, no follow through. So what we're looking for is an hourly trend change now. And at a minimum, I'm going to want to see the bulls probably over this little area of resistance. It's an afternoon spike high. It's a after hours high and possibly a pre-market level high. If we can hold over top of, oh, we didn't do it. We didn't do it. What's our range here? 5 cents. Okay. So what we're looking for is an hourly trend change. If we get an hourly trend change, then I start to look for some interesting trades, but I don't want to be going against all of the time frames. I want something in my favor, and if we can get the 5-minute and the hourly time frame working in our favor, then we can get into some good day trade conditions. Next up, wish downgrade. There you go. Thanks, Lori. PLTR. We are primed for a bounce in this guy. May come, may not. Ignore the RSI. Pay attention to the daily candlesticks and the short-term RSI. So our pre-market level is 24.97. We can go here and say, look, we got 24.51. We have a daily area of support. Can we bounce off that support? We go to our hourly time frame. We just dip below, low volume. Now we are looking for a trend change. We got over top of our little miniature area of resistance. So we're going to be looking for a bull move straight up, or we're going to be looking for hourly consolidation and an hourly higher low and allowing the bulls to try and carve out a bounce response. Let's see, our 4-hour time frame dipped into oversold. So we're seeing positive 4-hour bounce. If this is a 4-hour bounce, we'll be looking to our EMA 12 as a target, which would put us in the area of, let's say, $25 for a target. Go to the 15-minute time frame, and we'd be looking for a spike up, a 15-minute higher low, hold the support over 24.91 for a 15-minute higher low somewhere, and then advance to that 25.42 target. One of the things you could do here is look for that 15-minute consolidation. That will come at some point today for your entries on anything that has a significant amount of bull volume. All right, unfortunately, I didn't have time to get a lot of these tickers, and I wasn't able to look at anything from the chat room. I do have to go. Unfortunately, I'm streaming in 10 minutes for the community. We're going to be looking at things in detail. So if you are wanting to trade Amazon, that's what we do. We take a look at the market. We look at SPY. We look at QQQ. We go right down to the 2-minute time frame, talk about all the different scenarios. If this happens, how we react to it, and then we get a chance to look at individual tickers. If you love Amazon and you want some analysis on Amazon, I got you. I'll look at a 2-minute time. I'll look at a 15-second time frame for you on Amazon. That's what we like to do. Okay, guys, thank you so much for tuning in. Lori will be back on Tuesday. Monday is a market holiday. Have a great holiday. Have a great long weekend. Thanks for tuning in, and I will talk to you very soon.